on ET Now. I'm Anisha Jain, with me Amit Sarkar in the thick of the earnings season. So let's put the spotlight on Asian Paints. Mr. Amit Syngle, the MD and CEO at Asian Paints, is joining us on the show right now. Amit, hi, good to be speaking with you. Well, in Q2, your peers had managed to report a volume growth anywhere between 4 to 9%, but your numbers were clearly a bit of a miss. In fact, the volumes declined by 0.5%. What led to this divergence? Because we usually don't see Asian Paints, performing so badly versus its peers. Could you help us understand what really led to that?
So as we look at the last quarter, we have actually, just touched about our base in terms of the volume terms, and the value has been also negative. What we have seen is that the month of July was good for us, but then we saw all the rainfalls and floods which came in August, which were not very well distributed across the country. So we saw a muted demand coming in both August and September. And given the fact that, the seasonal component in overall our sales is very, very high, we definitely saw that in all the seasonal markets, we basically faced pressure from a point of view of our overall product mix and the sale which we could kind of make overall in the market. The other area which we felt strongly is that all the metro towns and the bigger cities did not do well for us. It was the rural centers which were a little bit better to that extent. Even the B2B market, which is close to about 15 to 20% contribution of ours, did not kind of go well for us in the way we anticipated. And the normally, the growth there is pretty strong in terms of what we see. And that was also something which went very slow. It was only the industrial markets which did well for us, where we grew at about almost 6%. Overall to that extent. And given the fact that with our competition in the organized sector, they have a larger component of the industrial sales, the impact on the deco sales for Asian Paints was much higher.
Right, sir. But sir, on one hand, you're talking about intense competition in the market, and on the other hand, you have also taken a price hike. So did the entire industry take a price hike? And given the intense competition in the market, how confident are you that this price hike will sustain throughout the second half?
We experienced inflation in the second quarter, and we also saw inflation in the first quarter to that extent. And given the inflation which was there, we took a price increase partially in terms of passing it on to the market. That was the clear reason. And we also saw a lot of volatility in terms of the crude prices, which was coming to that extent. The entire industry, paint industry, has taken a price increase as well. And as we kind of go forward, the full realization of the price increase will happen in quarter three. As we see to that extent, we feel that while the competitive intensity is higher, we should be able to sustain the price increase taken because it is something which is to a level of about 1.314%. And I think it is sustainable, definitely.
Okay, but with the price hike taken, will your margins be in the guided range of 18 to 20% in the second half of the year? Because, I mean, obviously taking into fact that crude might, stay stable, that's the assumption that we are taking. But can the margins be in that range?
So overall, when we look at the first half of the year, we are at a PBDIT margin of close to about 18.5%, as you can see it. And as we go forward, there are 2, 3 factors which are coming in. One is what we are looking at is the full realization of the price increase in terms of what we have taken. Second, we are working on a product mix which is much better. And third, what we see very clearly is that while there is a volatility in terms of the crude prices, there is some softening in terms of the raw material prices which we are able to see. So we are expecting a deflation of about a 1.5% also happening in the coming quarter. Given all this, and if we are able to get to a reasonable growth in quarter three and quarter four, we expect we should be kind of in the range in terms of overall guidance which we have given for the PBDIT margins.
Okay, so now if you look at the early trends for the third quarter, how are they shaping up? Have sales picked up? Has anything actually improved compared to the second quarter or the first half of this financial year?
So if you look at from the point of view of trending this year, one story which has definitely remained in the industry, which you have also seen, that the overall demand, whether it is the consumer sector, whether it is the construction segment, or whether it is the paint industry, has been muted. and as a larger share leader in the market, to that extent, the leader gets affected a little bit more, and that is something which we have seen as a sentiment continuing, despite the fact that in October first fortnight we saw some good retailing which is happening. We also have ongoing strong wedding season which is coming in November and December overall to that extent, but we have not seen the demand really pick up to that extent. One of the things which is definitely coming up is that the rural markets are definitely coming up, but on the other side the urban centers are showing a slower growth to that extent. So it's a trend which is mixed, but I think the story which has remained is that the overall demand scenario has not been very, very strong.
Okay, so demand scenario hasn't been that strong, but what does it mean for the volume guidance for the entire year? When we started the year, you talked about a double-digit volume growth. Is that still likely?
So when we look at the overall quarter three, as I said, that we've had a shorter Diwali because earlier last year the Diwali was in November mid to that extent, and that has an impact in terms of the immediate retailing. We also have a higher base in terms of this quarter in terms of what we are looking at. So I think we are cautious about the overall demand conditions, which would augur in quarter three and quarter four as we kind of go forward. And at the moment, we are looking at single-digit volume growths for the coming quarter.
Okay. So when it comes to a competition, Birla Opus has barely gained traction even after aggressive sales push that we have been seeing for the last couple of quarters. Do you see the competitive intensity to worsen further from here on?
Whenever the market conditions are slow and every competition is trying to kind of take a slice in the market, we see that the competitive intensity will go up, and that is what has happened. So we are seeing possibly the current players, the existing players in the organized market and the unorganized market putting up an aggression in the market very, very strongly across various parts of the country. With respect to new competition, I think as you rightly said, we don't see that there is too much of a very strong impact which has happened. But I think we should always give the new competition, a little bit more time in terms of seeing how their strategies unfold and what they kind of do in the market to that extent. So I think that game will have to be seen over at least a 2-year period to see where they are and what they are kind of doing as we go ahead. Having said that, we've seen new competition over a period of time, and we feel that currently, I think we need to kind of really look at our own brand strengths and leverage our strengths to kind of see how we kind of go in the market.
No, sure, I appreciate that you're looking at a 2-year period to see how the competition plays out. But let's say in the immediate term and during that 2-year time period, you expect the competitive intensity to remain high?
I would reckon that, because I think the competitive activity would remain for existing as well as the new players who have come in the market. And I see this trend till the time the demand really kind of flares up in the market to that extent.
Right, sir. Now we know that in the industry, Akzo Nobel is looking to exit its India business. Multiple potential suitors have lined up. Are you also one of them?
So as of now, we've been indicated by overall Akzo Nobel that they are looking at a strategic view of their review of their business in India. We have not got any particular details in terms of what the options they are looking at. I would suggest that when we have the clear options in terms of what they are looking at, what are the kind of strategies they want to kind of really get in, I think, our interest would only kind of come in from the point of view of a good clarity. And that is where we would kind of make a move in terms of where we need to kind of move as part of the whole area unfolding for us.
So, sir, are you saying that nothing has so far come from Akzo Nobel's side? They have not floated any paper which says they are either completely looking to exit or they are looking for tie-up?
Yeah, so only thing which has come from Akzo is that they're looking at a strategic review of their India business. And that is something where it stays. There are no kind of options and deals which have come up really in the open. I guess whenever it comes, possibly, then we will make a move in terms of what has to be done.
I'm just prying a bit more on that one, but would you consider buying out Akzo Nobel? Because if someone else does, then it might impact your dominance in the luxury category if they plan to, let's say, revive the Dulux category as well, which is their premium brand. So is it a matter that you will very actively look at buying out Akzo Nobel?
So, as I see it, the overall, the Dulux brand has been strong in the market overall to that extent. But I think it's too early to say whether, we would be kind of looking at a buy or not to that extent, because it all depends in terms of what options which come in, because we will have to look at all angles with respect to overall legal compliances and other areas which kind of come in, given the fact that we have a certain position in the market to that extent. So it all depends in terms of which way Akzo is looking at in terms of looking at their India business. And definitely that is something which we will look at once the options are there.
Sorry, I have to pry a bit more, Amit, on this Akzo Nobel, because the street clearly wants to hear more on this. What would be the deal breaker for you? Say if this is not happening, then we won't be interested in buying or tying up with Akzo Nobel. Is there any condition like that or anything in your mind which would be a bit of a deal breaker and you will stop looking at Akzo Nobel as a possible acquisition target?
So actually, today we have our own very strong strengths with respect to brand. We have a very strong premium and luxury brands which are there in the market to that extent. We feel that as of now, we look quite comfortable with respect to our business in terms of what we are doing. So till the time we really know in terms of the way they were looking at the overall business, I think it's very difficult to say whether it is going to be attractive, not attractive, and what is going to be the deal breaker there.
Well, thank you, sir, for joining